What if I told you there is a way you could be generating thousands of dollars of extra cash flow from your investment property while also guaranteeing future resale value? Sounds too good to be true, right? But it is real and very possible. If you're interested in finding out what it is, how this works, and who can benefit from it, stick with me and I will walk you through everything about it. Hi, my name is Eric Lee. I'm a chartered accountant with more than 15 years of experience and licensed real estate agent. I help property investors build wealth through smart investment strategies while maximizing tax benefits. Today, I'm introducing you to a program called Rent to Sell, which is developed and run by a company called Public Square. Although this is a sponsored video, I'm not here to praise the program, saying that everyone should consider this sort of program, but introducing how this works and give my honest opinion on this program. In today's video, I will cover what Rent to Sell actually is and how it works, and why this creates win-win situation for both investors and buyers, and key benefits and potential drawbacks you need to know about. And finally, who this program is perfect for and who should avoid it. Let's dive in. Rent to Sell is a program where you purchase an investment property that comes with a pre-matched tenant who will pay 50% above market rent for up to 8 years. You now may wonder, why would anyone pay 50% more? Here is the clever part. That extra rent they pay goes towards building up their own deposits to eventually buy the property from you at a predetermined price range, which is a minimum of 4% a year. How is the price range determined? Another clever arrangement here. The minimum capital growth is guaranteed at a compounded annual growth rate between 4 to 10%. You can see the different rates here depending on the timing. You probably think nothing can be guaranteed in the context of a property investment. Yes, I agree to some extent. However, you may change your mind if you understand a bit more. This program is all about a legal agreement between investors and tenants who are future buyers. So tenants actually sign a legally binding contract not just to lease the property, but also agree to the predetermined value of the property when they exercise the option to buy. So this is a contractual agreement, not just a promise by a company you probably never heard of. On top of this, the program actually guarantees 8 years of tenancy with free tenancy replacement if needed at no extra charge. Pretty cool, right? You may think, what if tenants decide not to buy the property? Luckily, there are solutions to many possible scenarios when things don't go to the plan. And I will cover various what-if scenarios later in this video, so stay tuned. Let's take a look at an example. Say you buy a property for $800,000 and the market rent is $700 a week. In this case, there are two perspectives you need to look at. Firstly, the cash flow. You will receive $1,050 a week, which consists of $700 rent plus $350 of tenant contribution. This actually is $18,200 of extra cash flow every single year into your bank account as you go. Not yearly, not at the end of the lease. And the great thing about this is that $18,200 will not be taxed because the nature of this payment is not income. The other perspective is capital growth. Let's say the buyer exercised the option to buy in the 8th year of the lease. The predetermined sales range will be between $1.05 million and $1.28 million, even if the market value of the property is actually lower than that. This provides a peace of mind to investors. So now you may wonder, what are the eligibility criteria? Very simple. This program is for properties valued between $500,000 and $1 million. It can be either established or brand new properties of your choice. But only properties acquired through Public Square's buyer's agent services are eligible. Until now, it may sound like a fantasy that provides all the good things only. Not really. I personally believe that the program is pretty good, but still there are some drawbacks. Firstly, as mentioned earlier, the program is only available for properties acquired through Public Square's buyer's agent services. You cannot bring in properties you already own or acquired through other channels. Secondly, the fees. This program is unfortunately not free. There's an engagement fee of $1,100, which gets credited towards the buyer's agent fee if you proceed. And the buyer's agent fee is $9,900 for established properties and $1,100 for brand new properties. So once the engagement fee is paid, there's no additional fee if you opt in to buy a brand new properties because you get the engagement fee credited, or pay $8,800 if you opt in to buy an established property. Lastly, the liquidity issue. Because you sign up for a long-term lease, you lose flexibility and the freedom of choosing the timing of a sale because the sale timing is more dependent on the buyer's choice rather than you as an investor. As promised, let's talk about some commonly asked questions, including what-if scenarios. The most commonly asked question is what if the tenant doesn't exercise the option to buy? As briefly mentioned earlier, tenants do not have an obligation to buy, but options. If they decide not to buy, they can opt out, but the contributions that have been collected will remain on the hands of investors and will not be refunded. This is stated in the contract as an exit fee to buyers, so buyers will need to exercise to buy to avoid losing the contributions they made. Then the investors will have option either to find a new tenant or sell it on the open market. So investors keep the contribution, which can be $145,600 over 8 years, using the earlier example. In most cases, tenants will choose to buy the property, then sell it on the open market rather than losing the contribution. This applies to the situation where the tenants cannot obtain a mortgage to complete the purchase. The buyer will have to leave the contribution behind, and the investors will find a new tenant or sell it on the market. Another common question is what if tenants default on rent? Everything will be same as ordinary lease arrangement as per tenancy law in each state, apart from the fact that the investors will be entitled to tenant contribution made so far as an exit fee, like the answers for the previous questions. Then what if I want to sell early? You can negotiate an early sale with the buyer. Or you list the property on the open market to find another investor willing to assume the agreement, and Public Square will assist you, but there is no guarantee. And what if Public Square goes out of business? All legal rights and contractual processes are secured upfront and remain valid even if Public Square ceases operations. As briefly mentioned earlier, this is a legal arrangement between investors and tenants, not with Public Square. So basically, you will still be protected based on the contract and the legal rights. So, who this program is perfect for? This program works really well if you want additional cash flow to expand your portfolio quicker while having peace of mind about your property's future value. It is also excellent for SMSF investors because the improved cash flow makes property acquisition more feasible within superannuation funds. But please note that the tax benefit from the negatively geared property will be trapped within SMSF. So you cannot utilize these losses for your individual tax returns if property bought under SMSF. Then, who should avoid this? This is not suitable for development projects, subdivisions, or renovation and resale strategies. This is also not for investors who want short-term flexibility because you're locked in for a long-term investment for up to 80 years, and you need to be ready for this. After all bells and whistles, the worst case scenario is that you end up with an investment-grade property under your control. The program doesn't involve transferring ownership until tenants exercise their options to buy. So your property will be always safe and yours. Before I made this video, I had to study quite deeply about the program and had a chat with the director of the company multiple times to ensure I understand the program well enough to introduce. I think Rent to Sell is a good program that creates a genuine win-win situation. Investors get enhanced cash flow and guaranteed growth, while buyers can enter the market earlier without spending years saving for a deposit. Also, I like the fact that ownership is not at risk and all guarantees are based on the legal contract rather than being a promise of a company. This video may not be answering all the questions that you may have. I will leave the link for complete investor guide for your information, but if you want to discuss more in details about the program and be genuinely interested, please feel free to book a discovery call with me using the link in the description below. Before you do so, please don't forget to click subscribe button for more property investment and tax insights. Thanks for watching, and I will see you in the next video. Bye for now.